Hi, my name is Marco, and this is my video essay for my English project. So, at this time of me making this video, in August of 2022, a global recession is quite inevitable. In fact, according to the data, it's already here. What is a global recession in the first place? Well, a global recession, as defined by the International Monetary Fund, or IMF for short, is an extended period of economic decline around the world. The main indicator of economic decline is a decrease in per capita gross domestic product, or GDP. This and various other criteria, such as decrease in trade, capital flows, and employment, are what identifies a global recession. The last global recession was only 2 years ago, caused by the COVID 19 pandemic. The recession started with a stock market crash, which saw major stocks drop 20 to 30% in late February and March of 2020. Then, COVID restrictions and lockdowns caused the fastest, steepest downgrade in consensus growth projections among all global recessions since 1990. The global GDP dropped an overall 3.5% in 2020. However, the pandemic harmed the poor and the vulnerable the most. Decline of remittances, high cost of healthcare, increased unemployment, and food insecurity all contributed to thousands of people becoming homeless and millions dropping into extreme poverty. The second quarter of 2022 has seen the GDP drop an annual rate of 1.6%, with unemployment increasing, stocks losing credibility, and inflation soaring high. What does this mean for us? The effect of a global recession on individual economies varies based on several factors, one of which is their connection to and dependence on the global economy. Countries like Singapore, for example, that depend on other countries for most of their resources, are greatly affected by global recessions. In developing countries, reduced foreign investment and reduced demand for imports in commodities and labor intensive products are having profound effects. The US is seeing reduced household purchasing power and tighter monetary policy, which will drive growth down to 2.3% this year and 1% next year. Amidst COVID 19 outbreaks and lockdowns in China, a deepening real estate crisis has pushed down growth to 3.3% this year. On top of all that, the Russian invasion of Ukraine could end European gas supply from Russia altogether. So, with all that being said, based on this article, the outlook for the global economy has darkened significantly in recent months, said the head of the IMF, and the world faces an increasing risk of recession in the next 12 months. The commodity price shock from the war in Ukraine had exacerbated the cost of living crisis for hundreds of millions of people. Inflation was also higher than expected, and economists and investors now think the US Federal Reserve could hike interest rates by a historic 1% when its board meets in 2 weeks' time. So basically, the summary of this article is a summary of the first quarter of 2022 and how it's going. And honestly, it doesn't seem well. In my opinion, we have to prepare, the public has to prepare for another recession. Perhaps not one that's as bad as the 2020 recession, but a recession is still a problem that we have to address. And so, how should we, the public, address this recession? Well, I found several steps, and here are what I think should be done during a recession. First of all, unemployment will definitely soar high, and people will go homeless, people will die, people will suffer from extreme poverty. And so, to avoid all that, we should update our resume. The labor market has been hot for job seekers, but that will change if a recession hits. People have to prepare for less overall job security. With employment being at all time highs, naturally employment will decrease. So, update your CV and your resume to ensure that you will get a job if you do get laid off. Secondly, reduce your expenses. Start to look at where you can cut back on spending. Think about where you want your budget to be for a worst case scenario. And a best case scenario, of course. You have to think about where you eat, or maybe we should cook our own food to save our costs. Things like that, little things will make a big difference in these times. Thirdly, we should start an emergency fund, or in other words, bulk up our emergency fund. Most financial advisors that you go to will recommend having enough savings to cover 3 to 6 months of life expenses. That could be worth revisiting depending on your specific circumstances. For instance, in this environment, it can make sense to have more than 6 months, especially if you think you could have an issue with your job down the road. So, definitely have an emergency fund or a trust fund. Fourth, pay down your debt. A lot of people have a lot of debt. If you are carrying any high interest rate debt, start focusing on paying it. Not only will it help you be prepared if you lose your job, but rates are also expected to move higher in response to the inflation. And my final tip, or my final solution for us to survive through this recession, is to stay invested. Invest in good stocks and healthy stocks. How do you figure out healthy stocks? Well, there are many ways, but me personally, I like to stick with the quantitative and the qualitative methods of picking stocks. The recent market volatility may have you considering cutting back on your 401k or your pension fund. However, it's important to keep your emotions in check and remember that you're in it for the long term. You never want to make an investment decision when you panic or when you are really afraid. So you have to try to step back and make a reasonable decision. And that should be all for my essay. Thank you and have a nice day.